Hey everyone, welcome back to BullionIQ, your go-to channel for everything finance and cryptocurrency, explained in simple terms that actually make sense. I hope you're having an amazing day because the markets right now are absolutely wild and there's a lot happening that you need to know about. Today we're going to cut through all the noise you've been seeing on social media and focus on the real facts. There's been a lot of chaos with Bitcoin, Ethereum, and XRP, and I know many of you are asking the same questions. Are we in a bull market or a bear market? Could XRP drop to $1? Could Bitcoin correct down to $80,000, $60,000, or even $50,000? I'm here to break all of that down for you, clearly and logically, so you can make better decisions in this market. If you're excited to understand what's actually happening with XRP, Bitcoin, and the crypto markets, hit that like button and comment X below. Let's make this an interactive discussion because your engagement helps us grow and share these insights with more people who want to be ahead of the crowd. At BullionIQ, we don't just follow the hype. We analyze the market like professionals, looking at real data, trends, and patterns that most people overlook. And today, we're going to do exactly that using some deep AI analysis from Grok, which has been a game changer in seeing through all the market noise. To give you some perspective, every major asset class experiences corrections. Bitcoin averages about 2 declines of 20% per year. Ethereum averages 3 declines of 20% or more each year. The S&P 500 sees about 4 corrections of 5%, and NASDAQ experiences similar drops multiple times per year. What this means is that corrections are normal. They're part of how markets function. The key is knowing when to buy after these corrections to maximize your gains. So yes, Bitcoin recently dropped from around $100,000 to $89,000, and XRP and Ethereum dipped as well, but now we've seen a rebound. XRP is trading at 223, Bitcoin at 93,535, and Ethereum at 3,155. The market is moving, and understanding these movements is crucial if you want to make smart moves. One of the most important things right now is Bitcoin's position because it still leads the crypto market. Most cryptocurrencies are tied to Bitcoin in some way, so its price action influences everything else. If Bitcoin can close above $95,000 by the end of this week, it's a very bullish sign. That's a critical level to watch, and it can confirm that the bull market is still intact. But beyond price, there's a bigger story involving regulation, institutional adoption, and upcoming government policy that could impact the markets. For example, U.S. banking regulators have now allowed banks to hold crypto to pay blockchain network fees, and there's the upcoming $2,000 tariff dividend expected by mid-2026, which could inject massive liquidity into the markets. We also need to pay attention to technical analysis. Grok's AI tool analyzed historical patterns, including 50-week and 200-week moving averages, death crosses, and geopolitical factors, to assess whether the bull market is over. Historically, a weekly 5,200 death cross has always marked the start of a major Bitcoin bear market. However, as of now, neither Bitcoin nor XRP is in a weekly death cross, which means structurally this cycle looks different from previous ones. This suggests that even if some short-term corrections occur, the larger trend remains bullish. Combined with institutional ETF inflows and pro-crypto government policies, the probability of an extreme 80–85% bear market is much lower than it used to be. So if you want to stay ahead of these trends and be prepared for the next major market moves, stick with me. In the upcoming segments, we'll dig deeper into XRP, Bitcoin, and how to interpret these market patterns to make smart investment decisions. Remember, this is BullionIQ, where we cut through the hype and bring you the real facts. Now let's dive deeper into what the data and AI analysis are actually telling us about Bitcoin, XRP, and the crypto market as a whole. One of the most important things to understand is that corrections are normal in every market. They happen in stocks, commodities, and crypto alike. Bitcoin has historically experienced 2 major 20% declines each year. Ethereum sees about 3, and major U.S. indexes like the S&P 500 and NASDAQ go through multiple smaller dips annually. So, when you see Bitcoin or XRP dropping temporarily, it isn't necessarily the start of a bear market. It's often an opportunity for smart investors to enter before the next upward move. Right now, Bitcoin recently dropped from around $100,000 to $89,000 before rebounding to $93,535. Ethereum and XRP followed similar patterns, with XRP sitting at $2.23. These short-term dips have many people panicking on social media. But the reality is that the weekly charts show the market is still structurally bullish. One of the most important signals to watch is the 50-week moving average compared to the 200-week moving average. In past bear markets, when the 50-week SMA crosses below the 200-week SMA, a situation known as a death cross, it marked a major downturn. But right now, both Bitcoin and XRP are well above these levels. The current death cross signals people are seeing are mostly on daily charts, which are short-term and don't indicate the start of a long-term bear market. AI analysis from Grok confirms this. It analyzed all past death crosses, historical drawdowns, and global geopolitical factors to predict the likelihood of a bear market. Historically, Bitcoin drawdowns of 77% to 85% followed death crosses in 2014, 2018, and 2022. XRP also mirrored this pattern with 90% to 95% losses. But in 2025, neither Bitcoin nor XRP is in a weekly death cross, which structurally differentiates this cycle from past cycles. This is crucial because it suggests that even if we see some price dips, the long-term bull trend is still intact. Institutional ETF inflows are another key factor shaping the current market. Hundreds of billions of dollars in new capital are entering crypto through ETFs and other institutional channels. Companies like Grayscale and Franklin Templeton are actively investing in Bitcoin and XRP, which demonstrates confidence in these assets. Institutional money doesn't act emotionally like retail traders. It's strategic and data-driven. When institutions begin moving into an asset, it signals long-term growth potential. For retail investors, this is a strong indicator to pay attention and position wisely. On top of that, government policies are currently very favorable. The Trump administration has signaled pro-crypto stances, including the potential creation of a U.S. crypto reserve that would include Bitcoin and XRP regulations, allowing banks to hold crypto for blockchain network fees, further strengthen the legitimacy and usability of digital assets. These developments reduce risk for large investors and make crypto a more appealing option for both institutional and retail money. Another factor to consider is liquidity. With the expected $2,000 tariff dividend planned for mid-2026, millions of Americans will have more cash to invest. If the bear market does dip temporarily, this new liquidity could be funneled into crypto, creating another wave of upward momentum. It's similar to what we saw in 2020 during the pandemic stimulus, which resulted in a massive influx of investment into digital assets. Understanding the timing of these events gives you a significant advantage in positioning yourself before the next major market rally. Finally, the takeaway from all this is that the market is not signaling the end of the bull run. While corrections can and will happen, the combination of institutional inflows, regulatory clarity, AI-backed analysis, and expected liquidity events points to continued growth potential. Short-term dips are opportunities, not reasons to panic. By focusing on these factors and staying informed, you're aligning yourself with the smart money instead of following the panic of social media trends. Let's focus specifically on XRP and why this digital asset is catching so much attention from both retail and institutional investors. XRP has always been different from other cryptocurrencies because it's designed for real-world utility. While many coins are mostly speculative, XRP's primary function is to facilitate fast and low-cost cross-border payments. Banks and financial institutions around the world are testing and integrating XRP into their systems. This isn't just theoretical, it's actual adoption, which gives XRP a strong foundation for long-term growth. When an asset solves real problems and gains practical use, it becomes much more than just another cryptocurrency. It becomes part of the financial system itself. One of the most important points to understand is how XRP responds to market cycles. Historically, XRP has mirrored Bitcoin's major bear and bull runs, but often with more exaggerated moves. Past bear markets saw XRP dropping 90–95% during extreme cycles. However, the current structure is different. As of now, XRP is not in a weekly death cross situation, meaning the long-term weekly chart is still bullish. The daily charts may show some short-term bearish signals, but these are normal fluctuations and not indicative of a systemic collapse. This is why AI analysis tools like Grok are so useful. They help differentiate between short-term noise and long-term trends. Another major factor driving XRP's growth potential is institutional ETF inflows. Big players like Grayscale and Franklin Templeton are putting millions into XRP ETFs. Institutional money moves strategically, not emotionally, and when hundreds of millions are allocated to a crypto asset, it's a clear vote of confidence. Unlike retail investors who may panic during small dips, institutions are here for the long haul. This trend alone could create a supply-demand imbalance, where demand rises faster than the circulating supply of XRP. A limited supply combined with increasing demand is one of the most reliable drivers of price growth over time. Regulatory clarity also plays a significant role. XRP has always focused on compliance and working within existing financial frameworks. Now, with U.S. regulations becoming clearer and pro-crypto policies emerging, XRP is in a strong position. Banks can hold crypto to pay network fees, and government initiatives like the U.S. Crypto Reserve show institutional-level interest. This is not only bullish for price, but also strengthens XRP's credibility as a serious financial asset. Regulatory uncertainty has historically been a big risk for crypto, but XRP's positioning reduces that risk dramatically. Liquidity events, like the $2,000 tariff dividend planned for mid-2026, could also play a significant role in XRP's next cycle. Historically, stimulus and liquidity injections have driven massive capital into digital assets. The combination of low supply, high institutional demand, and incoming retail liquidity creates the perfect conditions for significant price growth. For investors who understand these dynamics, these periods are golden opportunities to accumulate assets at attractive prices before broader market participation pushes prices higher. Finally, psychology and market sentiment matter. Early adopters who understand XRP's utility, institutional backing, and favorable regulations have a huge advantage. Fear and panic often drive retail investors to sell at temporary lows, but informed investors who focus on fundamentals and real-world adoption position themselves to benefit when the market rebounds. Remember, markets are cyclical, and understanding where you are in the cycle is more important than reacting to every news headline. In summary, XRP's strong fundamentals, real-world use, institutional adoption, regulatory clarity, and incoming liquidity events all point to significant growth potential. This is not hype. It's a strategic assessment based on real data and trends. For anyone paying attention, this is a critical moment to stay informed, stay patient, and position yourself wisely for the next phase of the market. Let's take a deeper look at XRP from a technical perspective and why it's starting to outperform much of the crypto market. One of the first things to notice is that XRP's recent performance has been stronger than many top cryptocurrencies. While Bitcoin and Ethereum experience fluctuations, XRP has been holding steady and even showing signs of an upward trend. This is important because it shows resilience. Investors are increasingly looking for assets that not only have strong fundamentals, but also show consistent price behavior during market corrections. XRP is starting to tick both of those boxes. Institutional ETF inflows are a key driver of this momentum. Millions of dollars are being invested into XRP through large funds like Grayscale, Franklin Templeton, and other major ETFs. These institutions are not moving randomly. They are strategically entering the market, which provides stability and long-term growth potential. When large sums of institutional money flow into a crypto asset, it can create what's called a supply shock. Essentially, there is less XRP available for retail traders to buy, which can push the price upward over time. Unlike speculative pumps driven by hype, this kind of price movement is grounded in real demand and long-term planning, making it much more sustainable. Technical patterns also support this bullish case. While the market has seen some short-term corrections, the weekly charts for XRP remain strong. The 50-week moving average is well above the 200-week moving average, and the death cross that worries many traders is only appearing on daily charts. Daily signals are short-term and do not override long-term trends. This means that despite some temporary dips, the overall trajectory for XRP is upward. Historically, weekly death crosses have marked major bear markets. But as of now, XRP has avoided that scenario, which significantly reduces the likelihood of a major 80–85% drawdown. Another factor contributing to XRP's strength is regulatory clarity. Unlike many other cryptocurrencies, XRP has worked closely with regulators and built a compliance-focused structure. Recently, the U.S. banking system approved banks to hold crypto for blockchain network fees, further integrating digital assets into the traditional financial system. Additionally, the pro-crypto policies of the current administration, including the planned U.S. Crypto Reserve, provide institutional-level confidence. When regulatory uncertainty is minimized, institutional adoption accelerates, which is exactly what we are starting to see with XRP ETFs and large capital inflows. Liquidity events are another crucial piece of the puzzle. The upcoming $2,000 tariff dividend planned for mid-2026 is expected to inject significant cash into the economy. When combined with institutional inflows, this additional liquidity could further fuel XRP's growth. Smart investors understand that these events create unique opportunities to enter the market at favorable prices. Historically, stimulus-driven liquidity has resulted in large upward movements in both Bitcoin and XRP. For anyone paying attention, these patterns suggest that the next major rally could be substantial. Finally, market psychology plays a big role. Many retail investors are still skeptical, while institutions continue accumulating. Fear and uncertainty often drive people to sell during short-term dips, but informed investors who focus on fundamentals, adoption, and institutional behavior are better positioned to benefit. XRP's strong fundamentals, real-world utility, and institutional backing provide a confidence buffer that speculative assets simply cannot match. In conclusion, XRP is showing clear signs of outperforming many other cryptocurrencies. Technical patterns remain bullish, institutional ETF flows are increasing, regulatory clarity is improving, and liquidity events are on the horizon. This is not just speculation, it's a calculated assessment based on real data and market dynamics. For anyone who wants to stay ahead, now is the time to watch XRP closely, understand the trends, and position strategically for the next wave of market growth. Let's dive into the deeper market forces that could push XRP to new heights, focusing on institutional flows, supply-demand dynamics, and upcoming catalysts. One of the biggest factors driving XRP right now is institutional interest. Large financial players are actively buying into XRP ETFs, including funds like Grayscale and Franklin Templeton. This is not small-scale retail speculation. This is smart money entering strategically. Institutional investors have the power to move markets because they control enormous amounts of capital. When hundreds of millions of dollars flow into XRP ETFs, it reduces the circulating supply available for retail buyers, creating a supply-demand imbalance that can drive the price higher over time. Think about it this way. If demand is rising and supply is limited, prices naturally go up. XRP has always had a fixed supply structure, meaning there's a cap on how many coins can circulate. Unlike some other cryptocurrencies that continue minting new tokens, XRP's limited supply combined with growing institutional demand is the perfect recipe for a potential supply shock. These supply shocks are rare but extremely powerful, especially in markets like crypto, where adoption and liquidity are accelerating. Smart investors who understand these dynamics can position themselves early and potentially benefit from significant upward moves before the broader market catches on. Another important factor is regulatory developments. XRP has historically focused on compliance, which now becomes a major advantage. Recent U.S. policies, including the ability for banks to hold crypto for blockchain network fees, directly support XRP's integration into the traditional financial system. On top of that, the pro-crypto stance of the Trump administration, including the creation of a U.S. crypto reserve, further strengthens institutional confidence. When regulations are clear and supportive, more large-scale investors are willing to commit capital. This combination of institutional interest and regulatory clarity is rare in the crypto space and gives XRP an edge over many other coins. Liquidity events also play a huge role. The planned $2,000 tariff dividend by mid-2026 could inject additional funds into the economy. Historically, events like government stimulus have pushed retail investors to allocate new money into digital assets, creating additional upward pressure. Combining this new liquidity with already strong institutional inflows could lead to substantial gains for XRP. This is why understanding timing is critical. Investors who enter before these liquidity events and before institutional buying peaks are in the best position to maximize returns. From a technical perspective, XRP continues to show bullish signals. Short-term daily charts may show minor corrections, but the weekly charts remain firmly bullish. The 50-week moving average is above the 200-week moving average, meaning the long-term trend remains upward. Unlike prior cycles, XRP has not entered a weekly death cross, which historically signals major bear markets. This structural difference makes extreme drawdowns less likely, giving investors more confidence to hold or accumulate during dips. Finally, sentiment and psychology are essential. Retail investors often panic during minor dips, but XRP's strong fundamentals, real-world utility, and institutional backing provide a confidence buffer. Early adopters and informed investors have a strategic advantage because they can see the long-term story rather than reacting to daily price swings. XRP is not just another speculative coin, it's becoming a key player in global financial infrastructure, which increases both credibility and potential upside. In summary, the combination of institutional ETF inflows, limited supply, regulatory clarity, upcoming liquidity events, and positive market psychology creates a powerful setup for XRP. These factors suggest that XRP is poised for strong growth and could outperform much of the crypto market in the next cycle. Investors who stay informed, patient, and strategically positioned are likely to benefit the most from these trends. Assets in the crypto market right now and how you can approach it as a smart investor. We've already covered a lot: market corrections, institutional inflows, technical charts, and regulatory clarity. But the key takeaway is understanding why XRP is positioned to grow and how the current environment provides both opportunities and strategic advantages. First, XRP's real-world utility sets it apart from most other cryptocurrencies. While many coins are mostly speculative, XRP is designed for fast and low-cost cross-border transactions. Banks and financial institutions are already testing and integrating XRP, which gives it real adoption.
This isn't hype, it's tangible use.
When an asset solves a real problem and gains practical adoption, it becomes more resilient and less dependent on short-term market sentiment. In other words, the fundamentals are strong, and that's why institutions are paying attention. Next, the technical picture supports continued growth. Weekly charts show that XRP remains in a bullish trend, with the 50-week moving average well above the 200-week moving average. The dreaded death cross on the weekly chart hasn't occurred, which historically has signaled the start of major bear markets. Daily chart corrections are normal and should not alarm you. They're short-term fluctuations that do not change the overall bullish structure. This structural difference from past cycles makes extreme drawdowns less likely. Even if there is a temporary dip, it could be a high-probability buying opportunity for investors who understand the cycle. Institutional ETF inflows and smart money positioning are huge. Funds like Grayscale and Franklin Templeton are investing hundreds of millions into XRP. This reduces the circulating supply, creating a supply-demand imbalance. More demand than available supply naturally puts upward pressure on price. These inflows are strategic, data-driven, and long-term focused, which is very different from retail-driven hype pumps. For anyone who wants to play the market intelligently, following the path of institutional money is one of the smartest moves you can make. Regulatory clarity adds another layer of confidence. XRP has built a compliance-focused ecosystem, and recent U.S. policies, including allowing banks to hold crypto for blockchain fees and plans for the U.S. crypto reserve, signal strong government support. Institutional investors often wait for this type of clarity before committing capital, so the current environment positions XRP for increased adoption and investment. Regulatory risk is one of the biggest barriers in crypto, and XRP is significantly ahead in this aspect. Upcoming liquidity events, such as the $2,000 tariff dividend expected by mid-2026, could inject additional funds into the economy, creating more buying pressure for digital assets. When you combine this with institutional inflows and favorable regulations, the conditions are ideal for a potential rally. Historically, similar liquidity events have led to major growth in both Bitcoin and XRP. For early investors, understanding the timing of these events is key to maximizing returns. Finally, market psychology and sentiment matter. Many retail investors panic during small dips, but informed investors who focus on fundamentals, technicals, and institutional activity are better positioned. XRP's strong use case, compliance, and adoption provide a confidence buffer that speculative coins simply cannot match. Being patient and strategically positioned allows you to benefit from both short-term corrections and long-term growth. In conclusion, XRP is uniquely positioned in the current crypto landscape. With real-world utility, strong fundamentals, bullish technicals, institutional inflows, regulatory clarity, and upcoming liquidity catalysts, this is a market where smart, informed investors can gain a strategic advantage. For those who stay focused, patient, and analytical, the opportunity here is significant. Keep watching the charts, stay updated on institutional moves, and be ready to act at the right moment. This is BullionIQ, where we break down the complex world of crypto and finance in a way that's simple, clear, and actionable. Stay informed, stay patient, and let the smart money guide your decisions.